Ladies and gentlemen of the crypto space, we're live on a Friday, March 3rd at 10:29 a.m. We're a little early today. It's a busy day, and I want to get some good content to you guys, especially after yesterday evening's volatility event. Now, bear in mind that volatility was started because of Bitcoin large spot sell, which triggered a nice leverage cascade. Obviously, everyone saw that, and that is exactly how speculative markets play out. Um, Volatility is not something that people can easily digest. It creates its maximum uncertainty over the shortest of time frames, and this is the topic I wanted to hit on because a good part of everything I've wanted to do over the years is offer a direction or a goal for how people can think to better navigate markets and just generally engage with all this volatile shit in a more sustainable way. Volatility is data. Data is absolutely priceless. The volatility in the bond market, we have the euro market, euro as a currency, a volatility indicator. We could see what the hell is going on with the Bank of Japan and its FX market. And we have volatility in equities markets, including volatility of volatility. So all this shit basically is a sentiment indicator. People are hedging and people are betting on volatile events unfolding. Um, but we're not traders. Are we traders? I mean, we want to trade at times when it's a very favorable condition, when a PVP style setup is available, and we could, extract some capital from less experienced persons. But predominantly, we talk about structured portfolios, structured capital management, structured enterprise ownership. So there's a very different equation with regard to value investing in that regard. And that, I guess, is the extent of what I can express of how to engage with markets differently. When you're a value investor, volatility is a bit of noise. Volatility is obviously data. It's invaluable for most pertinently entry prices. When you're a value investor, what you want is the cheapest price on a productive enterprise. And we stick with what Warren Buffett says. It's not stock, it's not coins. You want a part of a damn business. And if it's a business that doesn't offer you cash flow, that doesn't offer you dividends, then you own a pretty shitty business. If you bought a pizza shop and the pizza shop didn't give you some of its money every week, what the fuck? Why would you buy some shit like that? It would make absolutely no sense. If you think from a small business perspective, that's absolutely insane just to think. I'm going to buy a pizza shop and hope the pizza shop goes up in value and they don't give me money on Friday when they balance the books. That's crazy. So why do people buy stocks that give you basically bullshit access to their cash flow, or crypto assets that give you bullshit access to their cash flow? Maybe there is no cash flow. I am quite not fond of growth asset or the growth narrative of stocks and equity markets. I find it distasteful. So with regard to value investing, the most important thing is the best price, the cheapest price, and an enterprise that is more likely than less to continue to exist into the future. And you're still going to be overwhelmed with the volatility. Last night, sure, I saw that. I'm like, what the fuck am I going to do? And that's why I appreciate the structure of the portfolio I have nowadays. There's nothing I can do. And I've isolated different parts of the portfolio to do different things. And of the little bit of capital that I have to make decisions with, there was nothing to do. There's nothing. Am I going to purchase a depreciated Bitcoin? And I don't think the enterprises are at a sufficient discount to make a purchase. So there's nothing at a discount in the markets. It's still quite at premiums. And if there's enough of a volatility event, you're going to get even more of a discount on enterprise that is more likely than less to continue to exist in the future. So that was my thought this morning. And I would argue volatility can be marginalized in many regards. You can never excise it from the emotional impact it will have on you. But from a strategy, is it sustainable to respond to volatility? You could react to it by seeing an opportune price point, but the odds are volatility events cascade, they linger, and this is why we look at the technical data so we could try and assess when the volatility wave will finally subside. Markets will stabilize. You'll see liquidity conditions stabilize, liquidity flow between markets stabilize, and then you're identifying the maximum opportunity price point to acquire ownership of a desired enterprise. So Dan mentions a couple of interesting enterprises that I was talking about on Discord, and I have thoughts about. Let's talk about that. We have Balancer and Aura. Both of them give you access to their enterprise cash flow in very different ways, and including Aura BAL and just VE BAL. Um, and how do you choose between the different types of positions? Now, it's not as simple as there's the best possible position. Look, Humpty clearly thinks the balancer level is all the way. That's all he cares about. He just wants to own the enterprise, and that's what he does. And clearly the dominant owner at the balancer level, which is extraordinary. Now, we make decisions at our level, smaller actor level, based on the potential cash flow a position can have and the price point. Now, if you go over to Balancer on Vote Market, it's quite productive. It's relatively small numbers compared to Curve, um, but these still can be quite meaningful for many people. In fact, they're still quite meaningful for the position size that I have. Like I could vote for this position and I'd be very content with the amount of weekly revenue I get. About 33%. You get about 10 cents or so per VE BAL, and that fits well within my expectation and what I am capable of achieving and what I'd be happy with. So this is some of the thought process that I'm currently going through. I like this. Now, Aura, I would go over to the Llama. You could look at last week's, and it's very productive. 3 to 6 cents over the last couple of months. 6 cents was 2 weeks ago voting round, and that's very productive. And you could obviously do an analysis of the this is the amount of revenue you get per VL Aura, but how much does it cost you to buy that VL Aura? An Aura, I believe, is 3 and change, 299. Let's pull that up real quick. 3 and change, 290s, 310s. It was fluctuating for a bit. So you get more bang for your buck with Aura. That was a nice price point, 280. And this is my dilemma at the moment. I have an unlock coming up and a fair amount of capital gains that can be achieved, which would be a year and a half, 2 years worth of protocol revenues. And what do I want to own? I like VE BAL because it's base layer, and that's a sentiment I have with regard to Curve. I would rather own Curve level than convex level, and that's obviously contentious. Tetranoda loves his convex level, but note that he also does have a Curve level. I don't, I'm flip-flop over the last day or so when I said on Discord I wanted to exit Aura and apply that capital to a base layer position. Because Aura and Balancer are not curve and convex. And that's meaningful. At the Aura level, it might be a stronger position with regard to cash flow, and albeit Aura owns less of Balancer than Convex does of Curve, so that's interesting. You see how it's so complicated to make choices with these assets. And there's one rule that I always say: if it's complicated, stop and make it simple. I say that with my professional career, and it carries over to the way I think about what we do here. And if it's complicated, just stop. If you don't have a very definitive train of thought and it doesn't make perfect sense and it's obvious, it's probably best to do nothing. So I think that's where I'm at with regard to what I said on Discord to swap that capital over to the base layer balancer position. Just leave it. I mean, I did add to the balancer position. I tripled it, what I said I did on Discord. And that's all locked. So one thing that I do appreciate about Balancer more than Aura is the damn lock duration. Notice the only reason I'm considering this right now is because Aura only has a 4-month lock. It's not a year or multi-year like other protocols. So that's something that I think about often, and that's why I appreciate the long locks so much. It takes so much burden out of the process of navigating markets. You bought a lock position. There's nothing you can do. It's a purchase. It's not a position. But when you have an unlock, you're like, oh shit, now I have to think about what the hell to do. So obviously if Aura is strong, Balancer is going to be strong. So, and Balancer, I believe, expresses itself as entrenched at this point. It has momentum. It has partners. It has a large community. It's doing exactly the things I would like to see being done, indicating it will continue to exist into the future. So maybe the balancer position would be less productive than the aura position. And that doesn't, I don't hesitate much on that type of consideration. Everyone tries to maximize the position. What position is going to give me the most? And that's not something that I weigh heavily. I will, not most often, but I will and have chosen the less productive position as compared to the most productive position because it fits these types of thought experiments better. A greater lock duration, whereas Aura presents the burden every third of a year, and that's not something I really want to experience. So overall, I'm probably going to do nothing as of right now. That's what I'm thinking. I have another almost 2 weeks to contemplate this. But damn you, Aura, and your short lock duration. You're driving me nuts in March. Probably going to do nothing until tomorrow when I talk on Discord, and I'm probably going to do something, and I'm going to flip-flop 10 times before I do nothing. I hope that helps. It probably doesn't, Dan, but that's some of my thoughts on Aura and Balancer. They just have so much momentum, and that's what we want to see. Now, I firmly believe overall, Curve is dominant with regard to a currency producer positioning in this market. They own stablecoins. Aura and Balancer have very powerful novelty with the 80/20s. Their grants program and an 80/20 VE position is quite extraordinary. Note with the VE position on Curve, it's just spot. It's just pure single-sided. But when you have a VE that's an LP, that's freaking cool. And I'm seeing that more and more. We see that now with Lit. Lit is a VE 80/20 position. So that produces an interesting effect. So now you have VE that gives you your fixed voting rights, but it doesn't diminish or decrease available liquidity. But note that it's locked liquidity. So it's not like it's not the same as disruption of liquidity. It's not disrupting the liquidity, but it's also not adversarial liquidity where the liquidity can be pulled. This is locked liquidity according to the VE selection, the duration selection. So it's quite intriguing how that's going to play out. Now, I could digress a little bit into like Lit and Bunny, and how I see those three systems. So Curve dominates stables. What the hell is going to go on with CRV USD? That's just going to be wild, in my opinion. And Aura and Balancer have an edge with regard to what Curve offers in their V2 implementation. So the 80/20s has gained a lot of attention and interest. So there's a lot of strength there. So this is really like an Uber and a Lyft type scenario, a market leader and who's really just pushing the innovation. And that's like a Microsoft and an Apple. So Microsoft owns business, and Apple innovated with their iPhone, and they've done very well. But they they're not going to overcome Microsoft. They never have, and they never will. It's just the way it's always been. So this is reminds me of that kind of story. And where does Uniswap fit in? Uniswap is going nowhere. It's immutable. It has multiple versions, and for some reason, it has the largest market volume by far. So how else do you say it? New persons that enter the crypto markets use Uniswap, and they don't bother with aggregators to get the best possible rates to access the liquidity in the entire system. I mean, all they have to do is go to swap.defilama.com and look at all the aggregators. So clearly, if you're here, you're in some way, shape, or form interacting with the liquidity offered by Balancer as well as Curve. If you go into Firebird, all of this, all these are basically, this is an aggregator of aggregators. But less sophisticated market actors are still hitting Uniswap directly. So that presents an opportunity for Timeless and their Bunny product. Because Uniswap is completely uninvestable. The Uni token, it's useless, it's worthless, it has no value. And I define value as what's it paying you? Fuck you, pay me. So it's worthless. And LPing, people do it. There's a lot of capital there. And it goes back and forth with Curve of late, with who has the most capital, and still it's relatively small numbers. It's only a couple $1 billion. I look forward to the coming years when it's 50, 100, and that's going to be quite interesting. But the point is, there's capital there. Novice market actors use it, so you can't just focus on Curve and Balancer when you're a protocol. And this presents an interesting opportunity for the incentive system, the currency recycling system that has been bootstrapped onto Uniswap by Timeless and their Bunny product. And they're probably going to want to and have to use it to capture the the demand for these currency units on Uniswap. And you got to remember, these are the people using Uniswap. They're not going to use Curve. They're not going to use Balancer. They're using Uniswap for a reason, because they don't know how, and it's simple, and there's plenty of arguments that we can have in our mind to understand why people just use Uniswap directly, but that is the case. It is what it is. So there needs to be liquidity there for Frax and Liquidity and countless other protocols to have inventory, to have supply available for those types of market actors to do what they're there on Uniswap to do. So I think it's a great market fit. That's what I see for mainnet. It gets much more complicated if we start discussing L2s, and that's a whole other story. Let me try and get to some other questions. Tapsy's in the house, a pleasure. Did I get all that stuff, Dan? Also, more protocols move to 80/20 BP that will also directly benefit Aura, and how? Everything benefits Aura, because Aura facilitates capital efficient financing of VE positions or just LPs. And what catches my fancy is if we see more 80/20 VE positions, not just LPs, because that's just even better. because a VE 80/20 is a locked portion of liquidity. So we're seeing some very interesting financial patterns and structures, and they're just continuing to iterate and evolve. I mean, this all started with voter escrow and curve. And I mean, just thinking about what Balancer did, Balancer was a massive innovation. But it took them a while to get their VE BAL up and running. The 80/20s, it took a while, and the mixed constituent LPs. That's very interesting what they did. They're very innovative. So I look forward to how it plays out. Tapsy's in the house. One curious view. Assume good morning. Crypto and Web3 start ups. Take the W. Take the win. 2 year worth of protocol revenue is a no-brainer. Well, it's complicated because these are enterprise. So the calculation is ROI. So if you buy a property and it's on average, what, 500 grand nowadays for the average property in the United States, and what, you get a 4 or 5% on it? 4 or 5%! Takes you 20 years to make your money back. It's a useless ROI. Useless. 20 years to get an ROI is a shitty venture capital play. And if you're playing in the crypto space, you're a venture capitalist. You want an ROI of 2, 3, 4 years, 5 years? I mean, come on, even that's a long time. But if you get in 2, 3 year ROI, that's extraordinary. That's 30%, 30%, 33% will give you a 3 year ROI. So you were referring to the Aura. Yeah, that's another. So that's part of the complexity. It's hard. It's a hard choice, crypto and Web3. I'm not going to sit here dwelling on it, but you see my wheels are spinning trying to process the best course of action. Why not keep it in cash for now? Because it's productive and it's going to produce the money I wanted it to produce when I purchased the position. Cash flow cost averaging, as I've been labeling it. And it produces monthly cash that I use to pay for my daughter's school tuition. And I just paid my property tax, and I need this cash flow on the monthly to pay for these things. Now, if I have cash, as you're saying, why not keep it in cash? I'm spending it. I have to spend it every month. I have bills to pay for the estate. And if I own these things, I'm not spending the cash, I'm spending the cash these things that I own produce. So there comes the volatility, up and down, left and right. Where the hell are things going to be in 5 years' time? Can I get a better price point? See, it'll drive you freaking nuts. And that's why the voter escrow locked positions is so extraordinary. Because it takes pieces of portfolio management out of the equation and it gives you potential sanity. You can't sell it if you wanted to. To me, peace of mind is everything. You cannot make it in these markets if you cannot sustainably engage with the market, if you cannot just exist. The volatility is exactly why people lose all their money and they rage quit and they're like, I'm never touching it again. That doesn't work. This is a market. This is an emerging market. And obviously, we have equities markets in the US, and you can do well there too. I don't think there's much opportunity, but that's another story. But you have to engage with the market. You have to exist in the market. You have to own things from the market. You can't just leave. The thing to do is to own things at a good price. And then over the years, it does well for you. Um, Case anything that produces 40% APR in cash flow in a assuming sustainable way strikes my fancy. Well, it's not going to be sustainable at 40%. We're thinking on a very short-term time horizon. Now, Aura, let's pull up Aura. I have it here. So this has been very productive for quite a fair amount of time. It's well over a year, way above 40% on WF Aura. and even 55.78 on Aura Bow. Humpty's got dirty money. Um, this will dilute over the years. This will just continue to go down, down, and down as more capital sees that it's been 55% for the last 2 years, 3, 4, 5 years. That's when capital goes in and dilutes the APR. But then obviously, if it's getting diluted, the value of the asset is going up because it's being purchased, and then that's why I don't opt for this type of position, because then it can be sold. If the value of this of Orabao triples, that's 300%. That's 6 years worth of returns just holding it. So now we go back to crypto and Web3 startups point. If you could get 6 years worth of returns in a single sell, it's probably a no-brainer. So I don't like those types of equations. I will happily take the 55% if I could lock it in perpetuity and don't have the luxury to sell it or the option to sell it, because I have removed that complexity from my life. I have excised that burden of having to do something. Do I sell? Do I buy? It's fucking stressful. I gotta go. I want to go play with the kids at the park. I want to go out with the wife. I want to live my life. This is not something I want to be burdened with, these types of decisions. So that's why I absolutely love locked positions. I think that's the biggest innovation of crypto markets. Deterministically locked. Critical Mass is in the house. A pleasure. Joe, one curious view. Is your dilemma capital efficiency versus risk profile of VE-BAL versus VL Aura? No. The dilemma is it's a hard choice, and there's a lot of attributes to consider. I'm not going to rehash the thoughts I had earlier, but the several month lock on VL Aura is not my fancy. I prefer 4 years and call it a day, which is basically permanent locked and decaying voting rights. So you own it. And look, all of this thought that I'm having right now is because the lock is expiring, and now I have a choice. I want that choice gone, and that's probably something I think about often, and why I choose certain positions. VE-SAT and cash, there's a lot of stuff always coming to everywhere, my friend. Endless. I have to pay to enter in your Discord community data. The Discord is the main channel is free, but there's a lot of channels and a lot of content over the last year and a half, 2 years that the Discord has been there. And there's some very juicy channels that deal with bribes, vote rentals, and technical analysis and trust conversation, as in trust trust structure. So there's some very juicy premium channels, so to speak. Um, but the link is at the bottom of the description to this video on YouTube. Um, and I don't really publicize the free main channel, but we'll see how this evolves over the coming years, and I look forward to a bull market where we actually have a growing community instead of a dwindling community. But as I always end the stream, I'm grateful for everyone that stays there. Don't leave markets. Don't leave markets. You stay in markets. You navigate markets. You dominate markets. You put a market in a headlock, and you do the best you can. But you stay, because over the years the market will do you well. Joe, do you have any opinion on WUSDR? I'm pairing with USDC. Too good to be true. Well, it's too good to be true because it's going to get diluted. I don't know what WUSDR is, but that's aside from the point. Everything LP is always diluted, or there's some sort of unsustainable risk profile, and it's going to be volatile. So so OUSD is interesting. That's another story. We talked about that briefly. So just remember that dilution is a big thing. The odds are the LP position is not going to be as productive as you think. If you put like $5,000 into something producing, you know, 100% ROI. It's not a lot of money every day. It's a couple of dollars a day. It's 5 grand a year. 5 grand a year is divide by 10 grand a year. Divide by 12 is 800. 12 grand a year is $1,000 a month. So that's divided by 30 is well, that's a fair amount. That's the $30 a day. So who's getting 100% on 12 grand? 100%. So it's complicated. See, I don't like the complexity. I don't like LP positions. I don't like that shit. It drives me nuts because it's volatile. The attributes of the position change. Do I stay in the position? Do I adjust the position? Is there an opportunity cost? Is there something better elsewhere? That's why the voter escrow is such a saving grace for the way I really want to engage with markets. Dan, if you pay me is my favorite rule. I mean, isn't that the guiding light? Who's buying something if they're not getting paid? I'm going to invest in your company. I'm going to buy a pizza shop. You better pay me every damn week. I'm not just buying it for shits and giggles. That makes no sense. So I think that is probably the most important thing when you're thinking about capital investment. How much is it going to pay you? And is it sustainable? Is it going to exist into the future? Is it going to keep paying you so you can live your life and not have to sit in front of a computer looking at technical analysis driving you nuts? Let's look at some charts real quick and we'll wrap it up. Yen and Japan's constant shit show. Curve pushed down to the 10 SMA on the monthly. At minimum, it's expressing support. You guys know that I say support is a position of weakness. On the daily, it also hit the 10 SMA. It's firmly within green TWAP position. Below the 50 SMA above. That's on the weekly. My apologies. It's been rejected by the 50 SMA. This is nice to see. So this is a position of greater strength than on the monthly. The daily, we had our golden cross not too long ago, right here, and then we broke down. We didn't break above the 50 SMA on the golden. We didn't hold the 50 SMA as support when the golden cross occurred, but we did hold the 200 SMA as support. This is interesting. If this continues, we'll see the 100 SMA, 200 SMA cross, which is bullish confluence. Overall, this is a very comforting position. I can't do anything about the position except watch it. So I watch it for posterity and just enjoyment to understand market conditions. Will an opportunity present itself for a new entrant? Well, one, I'm in the luxurious position that I don't have to consider that. It's a burden. When you want to take a position, that's a lot of responsibility. And it's frustrating and it's scary. And there may be the case if there's a large volatility event, you could see a massive wick down. Bear in mind that wick down occurred. Will a massive volatility event push lower lows? Damn, this was a heck of a volatile period right here. Luna and then FTX. I mean, come on, this went down 95%. Look at the depreciation on this. That's bars. Price range. It's a 95%. And people are like, is it going to print a lower low? It's a 95% retrace, and it didn't print a lower low. It didn't go to 25 cents, 30 cents. There was no one left to sell down here. Cost basis reset of such a magnitude is extraordinary. Anyone that was still holding down here, there was nobody left to sell. Can you imagine if you saw all the holders and you saw the people and you're able to talk to them? It's like there was no one on the sell line. There was no one. It was just like everyone down there had probably an interesting story to tell. Whether it's people like they wrote it off, meaning if they sold it, like why am I going to sell it at this point? It's already down 95%. So there's obviously that type of personality, and then there's the personality like myself. All right, it's down. Still producing a couple grand a week, so I don't really care. And I'm sure that's a lot of people, given the entire system is a currency recycler and it's built around voter escrow. So you can't sell. That's the beauty of the fact that you can't sell. That's really cool. Dan, what's your percent allocation to VE Lit versus Aura? Uh, Aura has grown. VE Lit was 25% when I bought it. It's grown a little bit. It's maybe 30% of my Aura position. Overall portfolio size is relatively small. Aura is about 10% of the portfolio. But I bought it at about 5% of the portfolio. It doubled, give or take. Um, you know, VE lit, so it's a lock position. I locked it for 4 years because shit, that's what I do. You know the deal, and that is what it is. The bribe market for lit isn't live yet. The bribe market is there, meaning they've done a tremendous amount of integration. It's integrated into hidden hand. There are no payouts, so it is not productive. There is no weekly revenue from it, so that is a massive consideration. From a voter escrow perspective, hey, look, Uni has a ew, Uni? Go figure. What does that mean? I don't know. This is going to be very interesting. So this is a could be very big. Applying a currency recycler to Uniswap because this never existed. Uniswap there is absolutely no incentives, and deploying incentives directly is completely irrational. So this could be this was a good pick, and this goes back to the few things that I have interest in: iPoor and Lit, Timeless, Money, their Money product. There's very few things that interest me in this market. I still think stablecoins are the most innovative thing in the crypto space. So that's kind of boring. All right, I hope it all helped. Today was a bit of an early stream. I wanted to get some content out to you. Not much else to look at. Maybe there's something else. Aura bumped up from the bottom. Balancer horizontal since basically last year. Lit back down to 10 cents. iPoor a bit of a discount. Maybe it'll get back down to this range, 230s. So there's some nice price points. 230 to 270. Maybe I'll nibble a little more. Let's see where oil's at. Oil is basically the volatility inducer for the entire planet. This thing rips to the upside. There you go with currency. Eurodollar futures are still low. This is what scares everyone. The dollar, DXY, it's held support above the monthly TWAP. This is what I said. I said the breach to the upside with this bullish engulfing candle, you'll need a month or two to see where it's at. And we got a rate hike cycle. We're going to see how much they print, a quarter or 50 basis points. We shall see how this plays out. 10-year looks a little toppy. The double top. So, I expect volatility. I expect very frustrating events to unfold. And was really why I wanted to do this stream and why I started with the story that I was trying to tell. I expect a tremendous amount of volatility, and that is not good for mentality, mental health, well-being. So there needs to be a more sustainable way to engage with markets. So last night I'm seeing Bitcoin go down. I'm like, all right, it doesn't affect me the way it used to because I've seen it. I've been there. I've done that. Success in markets is one part experience, one part risk management. and that's based on experience. And then third part is just, you know, getting a cheap price on productive assets. Um, Ethereum is just horizontal since last year as well. S&P, oh my God, it's above the 10 SMA on the daily. How do you like them apples? Um, that's interesting. I can't believe this thing is still holding on. This is a massive bear flag. You got head and shoulders and inverse head and shoulders. You got fib supports. Look at this, 0.236 as a support. And now it encountered maybe the 0.382 as resistance right now. It was a failed breakout. It certainly encountered the 0.5 as resistance, but it found the 100 SMA as support. 100 SMA, 200 SMA support in the daily. Let's go out to the monthly. Why are we driving ourselves mad with short time frames? Look at that 10 SMA. So right now it's a battle between the 10 SMA and the TWAP. So there was three encounters with the TWAP thief failed breakouts. You know, this is why I don't look at the damn S&P. It'll drive people nuts. All right, everyone. Thank you all. We'll wrap it up for today. Next week should be interesting. The coming weeks should be interesting. You can't look at the dailies. They'll drive you nuts. You got to go about things on a weekly and optimally, even more optimally, a monthly basis. Everything else is just noise. 25 people remaining in the stream, 8 likes. Thank you all. We could do a little bit better. I wish you all a wonderful day. Friday, March 3rd, 11:10 a.m. Tell everyone to subscribe. Can't help people if they don't hear my words. You know the deal. After party on Discord for the most rational community in the entire crypto space. I appreciate everyone in there. Have a good weekend. I will see you on Monday. Peace.